All right. So, after thinking about this a little bit for a couple of minutes, I think that I should probably explain a couple of things real quick, just to clarify. So, normally when you see these green and red boxes in trading, these are position boxes. Uh, People use these to communicate information, right? And the information they're trying to communicate is where do you enter the trade, which is usually this gray line right here in the middle, somewhere in the middle of the box. The red area going down to here is sort of represents the area in which you might enter a trade, and the bottom of the red box represents a level at which you might set a stop loss. Uh, in that same way, the green areas on these typically represent the area in which you are in profit, and typically the top of this green box is your take profit level or your highest take profit level. So this is just an example of like a standard issue um, position overlay on a chart in TradingView, right? Now, when I use this to express what I'm doing with a grid trading bot, I'm using it a little bit differently, okay? This green area, which normally for the long position would be the area where you're in profit, is not necessarily an area where you're in profit with the grid bot. Um, what this is instead is this shows you the range at which the bot is opening positions. This bot is the bot that I have currently going is going long on APE coin, and so it's only going to be opening long positions from this area of about 0.86 up to about point or 1.45, right? And so it will actively trade and make money for me automatically as long as the coin ranges within this area and the bot doesn't get liquidated. Now, where will the bot get liquidated? It's opening long positions, and so the long positions can cause liquidation if the price goes down too low, because they will fall into loss and eventually get to the point where all of the margin is gone and the bot will just be closed by the exchange, and we call that liquidation, right? So I've shown here roughly on this graph where I think liquidation for this bot will be, but as the bot trades over time, it will build up margin that the bot holds, and that margin secures the bot against liquidation, so it can tolerate bigger dips in the value of the coin the longer the bot is running within its grid, which is why these are really useful sometimes. So when I'm expressing this in using these charts, the liquidation value is down here, or where I think it's going to be is down here in the red area. The red area is where the bot is not trading and probably isn't lost, and so we're kind of going to be worried about liquidation when it's down here. The green area, the bot might be in loss and be in the green area, but as long as it's in the green area, it will be making us money, and it will be actively trading back and forth to make margin, which secures it against liquidation. So that's a good thing. That's what we want, right? The other thing that I was going to talk about is I was going to try to kind of talk about a little bit about how grid trading actually works, right? So if you were going to enter a long position, right, you would place a buy order at, say, current price or a little bit below, maybe right here. And what I will often do when I'm trading is actually place 2 or 3 long orders, limit orders, going down like this. So say if I, for example, think that this coin is about to go down in price, it looks like it started a downward swing, and then I expect it to rally afterwards. and pump, then I would place orders a little bit below where it currently is, anticipating that dip, and then hoping that it'll go up and I can take profits somewhere higher above it, right? With grid bonds, they have a whole bunch of, what they do is they place a whole bunch of limit orders. And the orders aren't necessarily actually all actively being placed, but they're scheduled, sort of, by the bot. And so as this price goes down, or as it moves, the bot will be placing buy orders as if I had placed a bunch of limit long orders going down. And the way that this works, it'll place, say, a bunch of little long orders here. And as the price goes up, it's longing it, price is going up, hooray, yay, we're getting into profit, everything's good. When the price goes down, however, the bot will automatically set sell orders, take profit orders, right above the long orders that it placed. So as the bot is buying, setting long orders, it's also setting take profit orders for those same positions that are just slightly higher than the grid line, than the limit order at which it opened long. So it's sort of automatically setting, opening very small, teeny tiny long positions. It divides up the amount of money that you put in the bot when you start it into however many grid lines you want. And then it also sets a take profit level or a stop loss right above that. So if the price, let's say for example we have something set up like this, and I'll just go, how far did I put this out? And just go out to somewhere blank, like this. So say we have these two grid lines, and the bot is trading these grids, right? If the price goes up, it'll buy as it passes the blue line, right? And so we're in profit, hooray, yay, all's good. It goes up, it's bought again, and you're in profit, hooray. Cool. So we could close the bot here, and it basically would be a successful long with us having bought at 1.18 and also at 1.21. And we could close in profit if we wanted to. But we are instead going to be holding, and what will happen is as the price moves around, and the price we're going to kind of assume is going to fluctuate up and down and make a wave pattern like this. As the bot, as the price moves up and down, the price opens along here, and then opens along here, and then when the price comes back down, the bot will have automatically set a take profit a little bit above the place where it opened its longs. So it'll take a little bit of profit as it goes down here, and then a little bit of profit as it goes down here before it reaches the grid line where the long was opened. And then as the wave, as the price action oscillates back up, it will buy again, and then as it oscillates back down, it will sell as the price moves down before it gets to break even. So by setting up a grid where you have a whole bunch of these grid lines, which the bot is buying and selling, a whole bunch of times, you can generate a teeny tiny little bit of profit every time it passes one of these grid lines, going up and down every time an oscillation happens. And that allows you to make profits without the price of the asset really dramatically changing all that much, right? And so this is a form of high frequency trading that you can engage in cryptocurrency, and also in stocks, and also in forex, and also in any type of market. Really, this is all fairly universal. In the same way that a rebalancing portfolio, Shannon's demon, so-called, the devil is in the details, works regardless of what type of market you're using a rebalancing strategy on, because it's ultimately a mathematical concept, and this is kind of the same thing. We're purchasing, opening longs, purchasing at a certain price as it goes up, and then as it goes down, we're selling just slightly higher than we bought as it goes down, all the way down. And that's how grid trading works. So it is to my benefit for ApeCoin to stay within this green range, because my bot will be automatically buying as it goes up, and then automatically selling at a slight profit as it goes down, the longer it stays within this range over time. And that's how grid trading works. The idea is that you can make money off this even in a bear market. You don't necessarily have to wait for something to pump. You can trade it back and forth as it moves up and down in a strategic way. So, yes, hopefully this video kind of makes a little bit clearer what I was talking about in the previous one. All right.